just going to be a quick little scan, quick little, stock market talk. Nothing has really changed so much, right? It's kind of remaining the same in terms of the phenomenal commons opportunities that we have across the board on various different names, and then the handful of options trades that you can take individually, right? But this general kind of distributive range still building out is kind of exactly what I envision could occur here, right? Where we see the preliminary signs, we see the legs established from a seller, we see the exhaustion at the new highs, we see the accumulative internal structures developing, kind of absorb or wiping this demand out of this general sequence that we're seeing, and we're just seeing a distribution build out, right? And so that's why when I see this structure and we see this big kind of accumulative sequence gap failure, taking out the October 10th lows where there's a lot of intent and volume and relevance behind this low, seeing the rally, we're now seeing, in my opinion, an exhaustive distributive hourly chart within these bear gaps, right? Where you have these two bear gaps within a 4-point range, that we're seeing a notable kind of sign of a larger seller here that you can execute here in terms of a short-sided trade, down to 675. Right after that, we kind of want to be a little bit more cautious with the short-sided trade, just because it could bleed a little bit lower, could find a higher low here in terms of a last point of support, right? When you think about this kind of accumulative range here, and could rally, in my opinion, I think that's why I have this. We could rally to new highs, and we could get, maybe a test or maybe the UTAD established right away. It's kind of dependent on what occurs. But when I look at this range and just the overall, hourly, daily, and even weekly structure, I do think this is building out a distribution to revisit the 564, this general range. I think we will, at some point within the next couple years, maybe even next year, take out the April 7th lows. But for now, it's very reminiscent of this November, December into February kind of Q4 and Q1 distribution, where we see the end of the year flows kind of keep this sequence compressed in terms of volatility and the lack of participation and volume from the broader, just in the broader equity market during the holidays. The flows have a lot more relevance during this time. And we're not necessarily seeing a great short, but we're also not seeing a great long. It's just the kind of stagnant price action where it's a distributive sequence that is being built out into the expiration when all these positions can unwind, and the market can move freely, similar to how we did last year, right? I think that's what's developing here, right? And I've said it before, and there hasn't really been a lot you can do. You can take a long here, you can cover your long when this progression gap is hit. Specifically, QQQ is really good at that. That 610 spot is very pivotal here. You can take a lot of commons trades, but I do like, at this moment in time, I like probably a SPY short into a SPY QQQ long, right? With QQQ, you maybe have a little bit of a better picture here to be painted, because could find a higher low a little bit, at like the 603 spot could be our higher low that's found. It could also be within this Wednesday the 26th gap. Whereas SPY, 675 is a little bit shallow, 659 is a little bit deep. But I think that this is a great short setting up at this. If you get your average entry around, let's say 684, you're kind of risking this gap to be lost. But let's kind of say this high to be taken out, because that would kind of be your break structure. This is so you get an average entry 3R to R here. We trade lower into some progression gaps. You can get 4 to a 6 risk to reward on a short-sided trade. If we take it all the way to 659, that'd be insane. But it's not like a home run trade just yet, right? I think there's, SMH filling this gap. I think this will probably revert into this general range as well. I think that you can take this short-sided trade. We have the Vantage Trump flows returning, but I do think that a quick little short could happen. Maybe a nice vol spike, right? Potentially. But these lows, this is very accumulative. When you see this capitulation print, you see the weak rally, and then you see those lows taken out with a massive amount of volume, because you have a lot of early longs that are trapped, you have a lot of late shorts that are trapped in here. We see the leg, we see the exhaustion, and now we need to see the higher low to really get aggressive and even think about considering a long position to new highs, whether it be on SPY, whether it be on QQQ, whether it be on SMH, right? I don't like the financial sector at all, but I don't have any edge there, right? So that's kind of my thought process, right? I do think that, an SMH short 340 or long at 340 would be pretty clean if I'm being completely honest. But I'm more focused on SPY and the Qs long kind of as a potential opportunity, right? I like energy, but the thing with energy is it just doesn't necessarily, like, I think there's a lot of potential behind this sector in the next year. This doesn't necessarily give me like the greatest edge, besides maybe some commons positions on a couple names, which I'll talk about, right? I think there's going to be an opportunity here that's going to be phenomenal. I just think it's going to take a little bit of time. I don't necessarily, like I said, have much of an edge to quite aggressively position myself on here, right? Whether it be options, whether it be commons, but there is an edge here, and there is going to be a better opportunity soon, in my opinion, right? In terms of really getting a clear picture, right? We have names like Oxy that look really good. This could be our higher low internal within like a very large reaccumulation off of a very important event to happen in COVID that sparked an 800% rally. But is this where I'm slamming aggressive positioning? I'm not necessarily. I'd love to see this low taken out. We had the Buffett news earlier this year in the April 3rd gap fill. However, that trapped a lot of early or late longs, right? And so we see the breakdown, we see the cumulative kind of daily sequence pan out. How does this behave, right? It's just not the clearest picture now. A commons position on a long-term perspective is great. We have USO, right? USO does look pretty good for an options trade, potentially into that 77 spot, but it's also a potential trade that could take a couple stabs, right? One of those things where the risk to reward is so skewed in one way that taking 3 or 4 stabs on an options position or even a commons trade and that not necessarily panning out the first time is fine, right? Just because you're wrong the first time doesn't necessarily mean you're wrong overall. That's something that you really, really have to understand when it comes to this, especially when the risk to reward is so skewed in one direction, where it's kind of almost just like this can be a phenomenal trade. It just is going to take a couple of stabs for me to really get that correct timing. And once it happens, it's going to be a home run, right? Meta off the 618, off the May 12th gap fill, right into the 669, 670 spot. Phenomenal, right? Up, off the lows, 16%. That's 32.64% on NETU, which is kind of what I was saying is the best opportunity for this trade. Just with the overall, I think this is the distributive sequence, but we see the climax, we see the volume dry up following the report, we see the anomaly kind of pour in on the week of the 17th, and we see the notable buyer and the wicks and the climaxes and the exhaustion from the seller's perspective of things. And we just see a really clean and easy move like butter into a news gap up on Thursday, right? You could potentially hold a little bit of this to 700. I wouldn't necessarily try to call like a home run up to 780 or 750, but that 700 range could easily be pretty easily hit, right? And really nice chart, right? Like phenomenal commons trade. Been discussing that a lot. NVIDIA distribution very evident. No edge here yet. I don't really care too much about a lot of these names personally. I think that they're all a little gross, but I don't think that they give you an edge on both directions, right? I talked about USO, I talked about Oxy. I really do like Ford commons. I think we're finding a kind of secondary or third, potentially fourth last point of support here for a push up to 15. Commons trade, phenomenal. UNH, I still like this. We're finding a higher low in a pivotal spot, but I would love a sweep of 300. Commons trade. Nike, commons trade, right? And these are all a little bit of a longer term perspective, maybe a couple months, but with a pretty objective risk, like the $60 COVID lows, targeting the $80 gap or $80 internal kind of potential path of least resistance here, right? Like this is a good chart. I've talked about these a lot. Snap, we see a really nice move following the report. We're reclaiming the internal lows that were swept in that report and sparked the subsequent, 30% move. Find our higher low. I mean, just look at the structure that's developing here, right? From a daily perspective, off of these internal lows that we swept as prior to the report, kind of a shakeout on the 5th on a 3% session, succeeding a 5% negative 5% session as well. Great trade setting up, in my opinion, right, to 940. After that, be a little bit more cautious, maybe to the 1040 range, but this is a name that I think you can play on commons, take a really nice 30 to 40% win, and then look to re-roll. This is something that if you have a longer term investment, I wouldn't necessarily be like against a move to $20. But it's one of those things where we're just kind of playing this range with the abnormal volume and structure developing, where there's kind of an edge on one side underneath a pivotal spot within the chart with the previous kind of context behind the name, as well as understanding how to play it. That's why I said the commons are kind of the best move here to fill that earnings gap from Q3, Q4 or Q2, but that was reported in Q3. Because of just the opportunity that's presenting itself within this little range, right? You have to, the time frame, the execution and the edge is all very pivotal here, right? Like if I was trading this to 940 on, weekly contracts, that's stupid. If I'm trading comments here on like looking for, this structure, but I'm trying to take it to $20, well, I'm not really going to get the move that I want, right? You have to understand what's your edge, how are you playing it, right? Path, highest volume week of all, not highest volume week of all time, second highest volume week of all time on a 35% move off of the report, right? We had the kind of climax here. We had the lows taken out in August. We had the failure within the gap from the report in May. We had those lows taken out. We had the April candle take those lows out again. We had the pop. We had the higher low and that last point of support, right? Here's kind of our spring. Here's kind of our climax, our secondary test. Here's our change of character. Here's our last point of support on a weekly perspective within the NWOG that we had that sparked the highest volume week of all time. We get the subsequent pop after, right? I've been talking about this for a while, specifically because specifically because of how the chart looks for commons, right? If you're just bidding this kind of $14 to $13 range, I mean, you can get just a 36% move on commons, cover, look for 20, and that's it. That's it. No options needed. Like I've been discussing this a lot, right? UPS looks good. It's not really a main focus of mine. There's just a potential stab here, but it just doesn't. It's not my favorite. It looks good though. Like if you want to take the opportunity on a little bit of a medium-term trade, I do like CRM on some commons, but it's a little speculative in terms of like your risk to reward. Although we have just taken out the August and April and August 2025 lows prior to the report. And it's sparking a nice little flush move, filling the gap, and then getting a subsequent rally off of those lows, about 15%, 10%, right? And this is a pretty nice looking chart, right? A lot of these names, the ADBE chart looks really good as well, where we have the kind of accumulative sequence building out, and we have the subsequent move coming off of this sweep of the November 2022 gap. This is one that I would be a little bit more cautious on. Wait for the change of character before bidding some commons. Probably same with CRM as well, just because of the speculation behind the structure, right? You want the kind of confirmation unless you're taking a very long-term position. Some names that I would kind of wait on, but that look very, very good and could develop a subsequent last point of support and change of character. Maybe the earnings report this week can kind of shed some light on the potential behind ADBE. Although I do think that a reclaim or a higher, like a nice little like path of least resistance through 375 can spark a move to 440, where we saw this kind of accumulative sequence build out here, and then we see those lows taken out. We see them taken out again. We see the progression begin to stall. We see the spring with the climax and then the leg. That's, this was a pretty nice 12% leg that happened with ease, right? So that's something that I'm keeping an eye on. I'm keeping an eye on like a name like Target as well that has a very accumulative structure in a very important spot, but no clear picture quite yet. Same with like an XYZ, right? Watching these, not necessarily executing. I do think the ADBE can potentially, and Bitcoin in general, can see a nice move. I like Disney. I haven't really seen an edge yet. We still have to get past this very large earnings gap. This is about like a 6% gap, 6.7% gap. But we're seeing the good signs of this potentially being a change of character off of the accumulation that began in 2022, sweeping the COVID lows in October 2023 and September. So I'm keeping an eye on this. Lyft is another one. Looks good. Doesn't look great in terms of what I would want to trade it. This $13 to $30 or $23 move is phenomenal. But for now, it's kind of like you can take that commons position or you can wait. I do like this though. This is a good looking chart. The monthly is phenomenal. It's a name like Snap where there's very notable like breakdown from the highs of 2021, and then accumulation that built out, and then you finally get like that change of character to execute on in August of this year. and then you can trade it and cover it into the gap and then wait to roll it again, right? Very similar to Snap. But overall, we still have a name like Palantir looking very weak and kind of developing a distributive sequence like a TSM, like a hood. I think Lulu looks nice, another longer term commons position. That never really gave me the entry that I want, right, in terms of like a shorter term trade. A longer term exposure to this would be pretty appealing as well. We've seen a nice move off Intel. Like I said, you can keep a little bit of this position remaining for the full earnings gap that we have from 2024 April, but not necessarily an option position, right? If I had to pick a handful of names that I was pretty confident on this year that have made their moves respectively, but still a little bit more juice left, Ford, UNH, Nike, Snap, Path. Meta was a little bit shorter term. Intel's really nice. Lulu can give you a really nice move, and if you take a longer term position, I think this can revert back up to the 300. So if you want to take a longer term position on Lulu, that's not a bad move. But that's really it. Oh my god. Okay. I really don't have much else to say besides a potential short setting up on SPY and do a nice long and a lot of commons trades that are available on time, um, multiple different perspectives and multiple different time frames, right? So that's pretty much it. I think there's a lot of opportunities, but I don't think that there's a clear kind of read quite yet. I think in terms of like the broader equity market, I think it's going to take a little bit of time. But just be patient. And my perspective has really not changed at all right now. It's just been, a little bit um, skewed by the potential. Like just how this is developed, right? Like timing is everything. It's a product of time, not price. So yeah, pretty much it. Pretty much my ideology and thought process.